folks, I'm L.A. Little and this is your daily TA wrap. Well, we take a look at these markets and we do it from a neoclassical perspective. And that means we look at supply and demand as we can see it on the charts as well as trend. We do that each day asking ourselves, what does it tell us about today and the future, right? The next few days. I do a show 4 times a week. I do it every Monday through Thursday. Live at 9 o'clock Eastern Time here from the base of what was actually a pretty cold Rocky Mountains tonight. Folks, I've got some delays on the quotes this evening and it looks like they're not coming through yet, so we're going to kind of feel our way here. Hopefully they'll be in towards middle or end of the show, and then we'll come back and do the updates on the actual indexes then when they show up, so I'll keep my eyes out for that. But until they do, let's use what we have available to us. Let's start with the ending numbers to begin with. We had the Dow up 134 today. It was a pretty good day across the board. And wouldn't you know it, it does make everything other than the Dow end up positive for the first quarter, just slightly, but positive. S&Ps were up 14 3/4, 1872. They're back up there about. Well, we'll see it here again, but they're back up there knocking on the door into that top floor again. Composite tacked on 43, the composite, the NDX, these are the guys that have been hammered the worst. And you can see the NDX here only up 0.68, still struggling. That is high flyers and the big cap technology. Semiconductor still doing well, but outside of that group, most of the NDX is still struggling. Russell got a big snapback today, 1.84%, 21 points, 1173. We had gold down again today, down again after hours. Looks like my silver has run off the board here. Let's see if we can get a quote on silver right quick. So what we got, YM, actually YI. That's going to be J14. Let's see if that gets it. Yeah, it was down slightly itself. So silver down slightly, and bonds, everything was down across the board on the commodities for the most part today. Just flat to slightly down. So the big numbers were on the indexes, right, and what they did. And if we pop over to actually look at the charts, and actually before we go there, you know, it was a gap up this morning. So we had another big, you know, gap up or gap down. And if you go back, and I'll just go back, say 10 days, we've had a lot of gaps up, right? I mean, there was one here, one there. I mentioned this, you know, in the trading room the other day, a gap up on Friday, a gap up again today. Most of these gaps haven't held. You know, they gap them up, and you know, here's another one back here. They gap them up, and then they close lower. Today it held, and it looked like it was going to hold early on. I was telling folks in the trading room it looked like it was going to hold today, and then we actually took off a little bit shorter after that. Now the NDX, the composite, is one of the weaker ones. You can see here how it faded. If you put the SPX up intraday and look at it, it was a different story. The SPX looked even stronger, so there's the SPX. So it was a good move overall. If we go over and we look at, you know, at the ETFs, given that we're still lacking our ending quotes here, let's see what these guys look like in terms of volume, in terms of what they're doing. Let's see here. So NDX, we pop up. Yeah, and so we're coming into the third floor. We absolutely got no volume as we're doing it on the ETF structure itself. So that is an interesting phenomenon. I'm trying to grab my drawing tools. Not quite prepared tonight. Sorry about that. Okay, so let's get this in here. So we've got, all right, we have the top floor right about there. The mid floor ran in that area, and then we had the bottom. Okay, and we traded down. We traded down into the bottom, tested on the lows, right, and then we shoot back up. That test actually was on lighter volume when we go back to look at it. So here was this was the bar it was testing into, slightly lighter volume on the test. We come back up now. We're trying to get back up here. We were at a 5-day high all morning long, couldn't break over it. It does look to me like this is gonna try to carry through and at least test up here, but it's weak. Now the volume to me, when I see this, a lot of people say, okay, well, that, coming up on the volume, yeah, we are, but it doesn't matter until you test into something. And we did test into a 5-day range today. And if we go back over and pull up this chart and take off these guys and pull it back to just 5 days, you can see how we were testing into the top of the range there, and we held all day long. But that still, to me, the real test is this bar, top of that bar, 187.99. We're at 187.18. This bar, 187.98. Right? That to me is the test. Right? You get over that, then you got to get over this top guy. But those are the two bars. So if I'm looking at these bars on the S&P, I want to see what volume looks like when it comes into these two bars. This one, yeah, it kind of matters, but it's not nearly as important. The real importance is up here, getting over that. If you get over that, you got a good shot to try to take this out. You've been consolidating since the beginning of March. And actually, if you go back, you've really been consolidating about 7 weeks. So long consolidation, yes, that can break out, but you got to look elsewhere, right? It's not just this, it's other things. In particular, what has been weak versus what has been strong, and what has been weak has been the NDX. If I look at the Qs popping back up here, their test will be the retest and regen off this swing point low. So the real test here will be up there. We'll see what it does when it gets up there. But it got into these big bars. It's going to try to climb up there and do this retest regen. And what does that mean in case you're new to this? Retest regen just means you come down, right? Then you try to go back up, and then you try to regenerate lower, right? So it's a fall, a bounce, a fall. That's the ABCD structure, and it really keys off the swing points that were broken. You have another one over here that was actually broken and tested. Well, was that tested into already? Let's see, that low was 88.30. No, we got into it today though. No, we just missed it. So we should try to test into those. So you actually have two swing point lows, and both of them are going to be tested probably. All right, so I don't see anything here that's that interesting. The one that was interesting today was the IWM, the Russell. The Russell pushed back. Now Friday, if you remember, the Russell pushed up, did a retest, and tried to regenerate lower. It was coming off of this bar, and the Russell broke two swing point lows on the way down. And those swing point lows, this one and that one. And so to me, as I told you, I think in the show last night, this is the interesting area to me. You're pushing up into it, you have no volume. As you come into this low, right, there's really no volume comparatively, and there's definitely no volume coming into this low. So, you got two lows, you're coming into both of them. You get into one and you stayed into it, that's good. Problem is you got another one, you trust into it, you don't have as much volume. And if you do get past these, then you got huge volume here, and that's where that resistance zone stacks up right there. So I think the Russell is going to really struggle here when it tries to get up, another, 0.5% or so max. So to me, the Russell will be the one to watch. This won't be the one that's going to give us the tell the earliest. And it's been a good indicator for a long time. I think the Russell's the one to watch as we go forward. Let's go over to some places that we actually do have our volume numbers. So if we pop into the IYT, it comes back up, really no volume. It's just a range trade. There's nothing there. Semiconductors actually got over the highs again today. So that high was 45.70. You go over it, you close underneath it. That was a failed test of the high. given where it closed, I suspect it will try it again as early as tomorrow. Talking about tomorrow, you got a lot of numbers this week. You know, when you think about the markets, you really have to think a little bit about what else is happening outside of just the technicals. And what I mean by that is you got PMI in China tonight. You got PMI here tomorrow, around the world the next day and a half. Those are the first readings that you get, the earliest readings that you get on what happened last month. And so those will probably bear more importance than they typically do because they came at the end of the weather situation. So, so much has been blamed on the weather domestically. If our PMI really prints weak tomorrow, it's going to be a harder and harder case to make in terms of the weather. The Australia rate decisions tonight. You got the ECB BOE on Thursday. You got employment numbers on Friday. So you see there's a lot of data coming out. We do have a little of a bounce going on here, but it really doesn't have much gusto yet. The IWM is the only one showing us anything so far. And then the other big thing that happened today already, and which was a lot of the reason that you saw that big power up move at the beginning of the day that I was showing you, where we gap up and just run. Well, a lot of that was about Ms. Yellen, who was given a keynote speech, and she was giving one of the bleeding heart kind of speeches where she felt so bad for, 2 or 3 specific people that she talked about that were unemployed and that the unemployment is a tragedy and so forth. And, usually the Fed chairmen don't get that emotional about how they feel about stuff. So, I don't quite know what to make of it. Does that really mean that we're never going to have another rate hike or something? It beats me. It was kind of stark when I look back at the transcript and kind of ask myself, what does this mean? I'm not sure what it means. 2 weeks ago it wasn't so clear what it meant. Now she's on the opposite side of that. If it means anything, maybe it means what it always does, and that is it's just more doublespeak from the Fed. XLE was breaking out. XLE got a little bit of pullback today. It was kind of hanging up there. We'll see if it comes back and retest and regenerate. It was a breakout on multiple time frames, so it will be tough to bring that one back in. XLF, again, range trade here. If I look at the XLI, this one actually was a little bit stronger, but it's still a range trade. Remember, they wouldn't break down. Now they're going back to the other side, and they're going to have a tough time breaking out. And if they can break out, well, then it means something. If they can't, well, it's more of the same. It doesn't change. XLK, same thing, range trade. XLV been beaten up as a result of the IBB and the BBH. It gets a little of a bounce here, but this one is just, this one's just range trading at a lower range now. The other one that was interesting today was the XLY, which is the discretionary. These guys really struggling. They came off, they did an ABCD structure, they bouncing back up. Their test will be into the swing point low if they can get there. They did break another one, so they're doing a retest regen right now. If you can't see it, I'll draw it out real quick. So this one, just like I was talking about the IWM, this would be a nice one to watch because it's the first one to come back after a breakdown and to see how it trades back into the range. If I look at, does it regenerate lower? If I look at the XLP, this seems to be the love sector again. Remember last year, about this time frame, this is exactly what happened last year, and it's happening again this year. And if I go back a full year, you can see what I'm talking about. Last year, this thing went on a huge run to start the year off. Of course, everything was making a big run, but this one in particular was making a huge run. Consolidated all year, made new highs, came back. Now it's back up there pressing those highs again. It's almost like another love fest going on with the discretion or the consumer products. Things like Hormel and Campbell's Soup and just on, those kinds of things, right? Money pouring into them. Let's see here. Oh, if we go to the ox markets, I was looking at bonds today. Bonds tried to sell off and really couldn't. So they're coming back in and doing a retest regen, right? So they gap down this morning. The retest regen is right here. right? If you look at the volume on that bar and you look at the volume here, and if you look at the volume on the breakout, right? No volume in comparison. What does it do? It flips around, heads right back up. So far, this looks like a successful retest and a regenerate higher. And this is what we were talking about just a second ago with the other sectors. The IWM in particular, I was talking about it. Is it going to do this ABCD structure to the upside now that it's going to quote unquote regen higher? It certainly looks that way. And if that's the case, what does that mean for the markets? Well, it should mean that, unless there's something I'm missing, that's a fear trade for the most part. We're tapering still. Now, I know Yellen said that she's not going to raise rates, and maybe that's part of it as well, but still, I can't see how much more of these can travel unless there's a fear trade. You're moving out of stocks, you're repositioning back into bonds. Maybe it's still portfolio readjustments that are going on, but we're pretty deep into the year for that to still be happening. You would think the money managers did that in the first quarter if they were going to. Certainly when they have to send those statements out. So anyway, that looks like it wants to try to go higher. If I go over to the dollar with all the rate decisions this week, what is the dollar doing? Tries to sell down, flips around. The dollar looks like it wants to go higher. If that's true, that should put pressure on gold, so that will be a nice read on gold. Will gold hold up again as a fear trade versus as a quote-unquote inflation trade or a quote-unquote currency trade? And so gold coming down, it's about done on its ABCD structure to the downside. This is another one of those that will probably give you a nice tell, especially if it rises despite a weak dollar. Despite a strong dollar, if the dollar does continue higher. All right, that's pretty much what I wanted to talk about. Let me see if the quotes are back up. If so, I'll grab those, and we'll see what the ending numbers look like. And it looks like they are, so let me get those pulled down for us, and we'll take a look at them and see what the indexes actually look like in terms of real numbers. I see some questions. Zach Green, man, I haven't seen you in a long time. So Zach is on. He says, what do you think of, he's got a bunch of stocks he wants to look at. Zach, let me get those entered in, and I'll pop back to them in just a second here. Once I can pop them up on multiple time frames, and I'll take a look at them for you, or with you. And for now, let's pop over though and see, well actually let me get these numbers in and then we'll come back to them. So what do you got? You got CBAC, OCLS, VISN, and AFAM. So let's see what those look like when we come back to them. Let me go back to the indexes now that we've got quotes. All right, let's start with the S&P. Let's see what the numbers look like on these in terms of volumes. All right, the volumes look better when I come to the actual index. That's why I try not to use the ETFs. Okay, so it's coming into these big bars, and it actually doesn't look bad. That looks to me like it's going to try to test again. So what do we got? 1874. It did 36. Did 32. 1875. That's pretty close, but it is a failure. So right now we don't see the juice coming back in. Let's look at the Russell. I mean, we got decent juice, but it's not, it's not like overwhelming. Here's the Russell coming back up. All right, so we had 367, we had 342, and we're coming back with 327. So you can see the Russell, like the IWM was showing, the Russell doesn't have any juice. Let's see what the NDX and the IXIC looks like in terms of volume, although it doesn't matter that much, not that bad. When I look at it here, it was another nasty candle if you saw. And IXIC, it looks okay. But this to me, in the IXIC, I guess I wasn't paying attention because it broke two swing point lows as well, huh? So this one is already doing a retest regen. That volume is 22.4. We're doing 21, 24. Yeah. So I actually wrote an article this morning. I said, it's so easy to be bearish here, but you have to be careful because, the the market isn't in that bad a shape. And so when you look at it, it's easy to be bearish, but if you look at the intermediate and long-term time frames, they're pretty bullish still. Now, if this is an intermediate term top, right, and the jury's still out on that because you got strength in the S&P, but you don't have it in the NASDAQ. You see high flyers, the things that drive this market, being sold off and being sold off fairly ruthlessly. You got earnings coming up. They've downgraded all the earnings again, so they'll probably be able to beat them at this point. So that actually is probably going to be a positive. And it usually starts out with the financials, which should be a positive. So it's hard to get too bearish too soon. If we're going to see a failure, we're going to see it on the retest and the regenerates lower. And so, from that perspective, I don't want to get too bearish too soon. And I think I said that last night. And, it's been a bull market for a long time. They're not just going to roll over, right? I mean, the markets are just not going to roll over. You're going to have to get failed tests that then lead, to greater sales. The first trip down never is going to have much off the top in terms of, fear, if you will, right? It's the second or third trip down where things really start, threatening on the intermediate term time frames. When the index is already down 4% or 5%, that's when the fear picks up, not when they're down 2%, or like the S&P, which is, what is the S&P? Not even down 1% hardly. All right, let's look at these stocks that Zach was asking about. And then Tesla, my man Federico wants to see Tesla as well. We'll throw that one out. So what do we got here? Let's start with, let's just do them in order. CBAC. So CBAC. So this is technology, battery, China battery. Okay. Well, in most markets, I'd say this is not a bad place to buy it, but it's China, and it's in a market that's generally struggling. Zach, I'd probably let this one come in a little bit farther here. 254 on the weekly. What does that look like here? 224, 254. Yeah, I'd let it come in and test this swing point high. That's what I'd try to do. I'd be patient, see if you can test this swing point high at least. That's 278. You weren't that far away from it today. Yeah, it's fading in, has no volume. It's just hard for me to buy a stock like this at this point in the market. You don't have a lot of liquidity. A lot of money ran into this. Yeah, it's in a hot sector, the batteries, with all the Tesla and everything. And also with, battery-powered cars in China as well. I assume that's what these guys are doing. I don't know anything about the company, but just from the name, it looks like that. I'd let it test in a little bit lower before I tried to take a piece of it. The problem is you gotta trade for it to trade under this bar, right? This area right here. If I'm taking this trade, I don't want to put stops too close, and so I want to use this as my stop out. That means you got to stop out down here. 80 cents on a 280 stock. I mean, that's a huge percentage. So you got to let it come in a little deeper, right, to try to take a shot at it. And if you could get it even down here, it'd be a lot better. But I'd at least see how it trades into that area right there. Next one up, let's just do them in the order I have them. OCLS. This is healthcare, so this is like a biotech probably. Innovative Sciences. Again, no volumes on these. I'd be very careful with this. I don't think I'd play with this guy. I don't see a lot of volume. Yeah, you got volume at the top, but pull over the weekly and look at your weekly. This thing is a huge range trade, and you're in the middle of it, right? Top is up there, the bottom's down here. When you see a bar like this, what it tells me is that this thing's going to range trade this bar, right, for a very long time probably. And so you're right about in the middle of the thing. I wouldn't be messing with the middle. If anything, I'd look at it down here and see what it looks like with a tight stop. So no, I wouldn't mess with this one. Let's see what's next. VISN. This is Vision China. Man, you like these Chinese guys, huh? They're all not much trading going on here, though. Is that what you asked for, VISN? Yeah. So I know you're probably looking at your weekly. Let me pull the weekly over so folks can see it. Again, I'd probably wait on this one as well. I mean, you're coming into an area that it should find support. It's just that I don't think you can trade this market right now, and you know, you're a member, so you know what I've been saying. I don't think you can trade this market with tight stops. You're asking to be stopped out, and so, especially with a thinner stock. So I would let this one trade back deeper. Let's see what it looks like on the daily. So you've done an extension ABCD, you bounce, you come up to resistance. So you broke multiple swing points, you're testing into a retest, regenerate. That looks like a failure. This one's probably coming lower. I would think that you're going to trade back into probably these highs, this high. So that's what, 1155? So I would wait and just see what it looks like at 1155. Last one for Zach is, what do we got here, Zach? AFAM. This is the A family, or whatever it's called, almost family. And these guys, I think, do like, they're kind of a, they're not really healthcare. They're in the healthcare sector. Is this healthcare? I thought this was like Ancestors.com kind of thing. Anyway, this one's trading down, stair-stepping down. If we look at it on the weekly, okay, coming in. Yeah, I wouldn't touch this one either, man. You just, this bar, you know, the low is 2176. You did 376. These two bars, it did more volume than those two bars tested into the bottom. It's going to test them again. So I wouldn't trade this one either. I'd let it stair step lower. So and in that one in particular, I don't even know that I'd want. The others actually have some potential. You just need to let them test a little bit lower. Let me take home care. Okay, thanks. So home care, it's interesting it's selling off so badly though. Or is that a REIT? Let's look at Tesla right quick for FIDI. So Tesla's coming into, let's see what the weekly is on Tesla. All right, so that's what you're looking at, huh, Federico? The bottom of that, 208. I think, you know, if you guys just take your time here, you're going to get better buys. This one's probably going to do a retest regen off this high. It's 194.50. 194.50 puts you back into the bottom of this area. 194. Yeah, put you back into here. And there's a gap there and a little consolidation. That to me looks like where it wants to trade. So in this particular case, you know, you had ABCD structures down, played them out, right? Finished them off. Now you got another one that looks like it's trying to set up another one. Will get you into, and certainly get you into that area. Maybe even comes deeper. You know, that retest regen on the weekly, if I look at it one more time real quick, that low is, on that weekly is, 168. That is this bar. So it's you know, the weekly is these bars. You may get it as low as 168. I would at least let it come back into the 190 area and see what it looks like there. And if that does do an ABCD structure down, that brings you right back into this area. I'd be patient here, especially with the stocks that have been high flyers. That's the ones that are taken to the cleaners right now. You know, if you want to trade something, if you need exposure, you know, walk over to something else like your energy sector or maybe even the financials where things are a little calmer, and maybe take a look at those guys. All right, folks, thanks for joining me. Zach, good to see you again, buddy. Have a great night. Take care of yourself. You know, it looks to me like it's going to be a struggle at this point. There's enough negatives and enough positives to get a little bit more of a push, but breaking out to the top side still looks like it's going to be heavy duty and going to be hard to do. Matter of fact, when I look over technology and I look at the other stuff, it looks to me like once we put in a little bit more choppy, right, we're going to get another leg back down probably. That's it for tonight. Have a great night, folks. Thanks for joining me. Take care of yourself, and I'll see you next time. Good night.